Hello everybody and welcome to another amazing video of DIY investing. For today's video, we are going to be breaking down the recent market correction. I'm going to be talking about why this is our wave 4 correction that was ultimately going to provide us an opportunity to get back in the market, and why we're also going to be expecting to see one more final impulse to come before this rally is over. This is a huge opportunity for anybody that was looking to accumulate some cheap cryptos. Many of them are giving us a discount, and so for today's video, we're going to be talking about how to best capitalize on this sell-off that's taking place. Thank you guys so much for tuning in, and with that being said, let's jump right to this amazing video today. Alrighty guys, now here we are to start off today's video, and we are going to be talking about the recent sell-off that we've had inside of the markets. Now we really only had two separate scenarios to play out. We had scenario 1 where our entire wave 4 was just this triangle type correction, or where we ended up seeing a deeper correction inside of our wave 4. And so far we've actually seen a deeper sell-off, and we're coming back down to some of my levels that I mapped out a few weeks ago. Now inside of those prior videos, what we talked about here was a move down to the 382 and even the 0.5. And that's where I said it was most likely going to occur for us to actually have a true trend reversal in the short term. And so we still aren't really at our 382 level. I still expect that we're going to have some more downside before this is over. And I do expect us to come back down inside of this support cluster over here. Now, as it stands today, what we're looking at inside of the Bitcoin chart is our wave 4 correction. This is wave 1, this is wave 2, this is wave 3. We're getting ready to complete wave 4, and then after that we still have one more final 5-wave impulse to come. And that's why I do believe that we're ultimately going to end up seeing a top prematurely of 30,000, most likely a run upwards of 26 to 27K, just to get us a little bit outside of our August highs over here at about $24,000 to $25,000. And after that, I am expecting a deeper correction where we would come down, fairly close to where we're at today. That as a rule of thumb, what we would expect to see after 5 waves up is a deeper ABC correction or some other type of consolidation pattern on the way back down. And from there, our 618 would take us all the way back down to about $20,000. And so it's something that we all need to be paying attention for, especially if you're somebody that, isn't going to be wanting to buy this dip. After this wave 5, we would actually expect a deeper correction. And so you may actually get a better buying opportunity as it stands now. I still think that this is a great opportunity to be getting in if you haven't, considering the fact we're still going to have another 5-wave impulse. And after that 5-wave impulse, or I should say during that 5-wave impulse, that's generally where you're going to see the altcoins outperform Bitcoin. It's always inside of the final impulse for Bitcoin that the altcoins end up gaining the most dominance. That's where the most money comes into altcoins, because the Bitcoin whales, all the people that accumulated down here, begin taking profits on their Bitcoin in the side of this final move, and then they rotate those profits back into altcoins for them to do the exact same thing. And so with that being said, it's important to understand that after this major impulse, that will be 5 waves off of our low from the very ending of our bear market. And so we would expect to see a deeper correction. And when we're looking at this on a bigger time frame, ultimately what I would expect to see if we remove our drawing tools is a move upwards of 26 to 27K, a deeper correction back down, and then for us to come back down to around 20,000 to 19,500. And then from there, we'd probably consolidate sideways for a few months, and then we could start our next impulse up. And so that's kind of what I'm personally watching for. I know a lot of people were watching for this big move off of the lows, like how we saw in 2019 when Bitcoin went all the way up to $14,000. But for me, I'm not really thinking that. Based off of the wave structure, based off of the way the market looks right now, I think most likely we get a slight clear above our range highs in August. And it won't be anything major. It's not going to be some major breakout by any means, but it will clear the range highs. And I think a lot of people are going to start accumulating, thinking in terms of, well, we just made our first higher high. We cleared the range highs of August. Now it's time to start buying. And then ultimately that will be our blow off top before we start a deeper correction back down. And the thing that I'm watching for is our major support level that we held for, the better part of 4 or 5 months right before the FTX collapse. And that's kind of where I'm going to be watching for us to come back down and reaccumulate. For me, I'm watching about 19,500 upwards of about 21,000. So this entire support cluster right here is where I actually think that we're going to come back down and retest. And so even if you're not buying right now, I still believe that we will get an opportunity for the long term to be able to reaccumulate. You know, based off of the Elliott wave structure, I don't think that this thing's going to be pulling, you know, something like this, where we just instant moon all the way up to $40,000 to $50,000. I did talk about that potential, but the way the market structure looks for me, it makes me feel like that's not going to be the likelihood scenario. And I think because of the fact our last cycle started off so quick in that way, I think a lot of people are assuming that we'll most likely just do the same thing again, because humans are very short-sighted. We see what happened in the last cycle and we instantly assume it's going to play out exactly the same as all the prior cycles. And really, guys, aside from this rally in 2019, if you look at all of our prior cycles, they've all been a pretty slow and methodical buildup all the way through. And so I still believe that that's most likely going to be the case once again in this cycle, is it'll take a little bit more consistent uptrending before we ultimately get any sizable type of move. And like I stated, guys, I'm expecting our cycle to play out a little bit more like our first cycle. And if we come all the way back over here, we'll kind of draw what I'm talking about, because I think that this is most likely the scenario that the Bitcoin markets are going to take. This just seems like the obvious scenario based off of the way our market structure looks and our Elliott waves. And so I'm personally going to be watching for something like this to play out, where we do end up clearing the range highs. But then once we actually clear the range highs and everybody gets really excited saying that the first higher high is in, that's where we're going to correct and come back down to around 19,500 to about 21,000. That's kind of the area of demand that I think that Bitcoin is going to come to. And then after that move is where we're going to get the much bigger expanse to the upside, where we'll probably come back upwards of about 40,000. So originally what I was talking to you guys about was the potential of where we rally up to about $30,000, which would be pretty much the support level that we were at inside of the summer. And then once we actually broke down from, you know, all of our lenders going bankrupt, Luna going bankrupt, Celsius, you know, all of those big exchanges, once they started to sell off, that was kind of our area that I figured we'd go back and revert back to the mean. Based off the way the market structure looks, I'm not expecting us to go all the way up to 30K, although it is possible. I'm expecting us to just go slightly higher than the range highs of August, and then for us to come back down and reaccumulate off of this prior consolidation level. Because you guys gotta keep in mind that this was a pretty important level. We held support inside of this range for a long period of time. If we go and pull up our date tool, from the very low end until the FTX collapse, it was like 150 days that we spent inside of this range. So that was plenty of time to build a solid foundation. And so I do expect that once our sell-off comes back down, that's where we're going to be making our first confirmed support and resistance flips. And it's just going to be taking a little bit longer than most people are anticipating. I think a lot of people I see on Twitter are just anticipating us to just rocket straight up into a new bull cycle. And while the move off the lows has been very profitable for the people that were positioned early, I still think that ultimately, you know, we're not going to get too much higher than where, you know, we peaked over here, most likely around 27K. And then from there, we will expect to see a deeper correction back down to, like I said, around $20,000. And so this is what I'm anticipating for Bitcoin. Regardless, if this is the way the market structure takes, you know, and we're looking at, you know, a couple months, maybe more of us going sideways, that's going to be a huge opportunity for people to just continue to accumulate. Anybody that works a job is going to be able to continue to dollar cost average, pick their good investments that they are really betting big on for this next cycle. And it's going to give you guys plenty of time to reaccumulate. I don't know if this is exactly the way the market structure will look. Generally, it's going to be pretty volatile. We'll probably see a lot of ups and downs, and it won't look as symmetrical as this. But the big thing that we're watching for is level to level. And that's the thing I want you guys to pay attention for. Whenever this correction ends, we will expect to see one more impulse and then us to come back down. And once we actually come back down into contact with this support range right over here, that's the point where I think everybody should be doing their part to be accumulating. You know, if you were accumulating down here and you accumulated at any point throughout this uptrend here, I think it's really important that during this final impulse, if you see a lot of altcoins that you're holding taking off in a big way, to take some profits, because you can use that profit to rebuy on any sort of dip that we get. And so, you know, a lot of people are expecting this move off of the lows, and if you are kind of just not willing to take any profits, it might hinder your ability to reaccumulate, depending on what your situation is in everyday life. I don't know how many of you guys work jobs, how many guys are using some of that money to put back into crypto crypto. If you've got a source of income that you can keep putting into crypto, by all means, you can just hold on to what you have. But if you're somebody that's focused only on making money through trading cryptos and buying low and selling high, then at this point in this final impulse is where you would want to take some profits, because after that, we would expect to see a multi-month reaccumulation, probably at least a month or two worth of a sell-off, maybe even 3 months worth of some sideways accumulation before we start that next impulse higher. And so we could be looking at, sometime latter end of this year before the markets start taking off again. And if that's the case, you will definitely want to have some money on the sidelines ready to buy the dip. If you don't have a job or you don't have enough income to keep buying in crypto, you'll definitely want to take at least some profit for when that move takes place. And so, like I said, guys, we could be looking at sometime in the latter part of the spring, most likely sometime in the summer, maybe even latter part of the summer before we start breaking out again. And that's just kind of the way the market structure looks for me. Now, guys, one of the other big important things that we need to factor in here is the SPX, because the SPX has broken out of its downtrend. We have cleared all descending resistance, but now we are starting to see a deeper sell-off take place. And so as it stands, what I've been watching for personally for a point in which I believe the SPX will bottom is most likely going to be around the 618 Fibonacci, which the 618 is actually going to be taking us back below this descending resistance. And so I drew this over here as a way to kind of map out what I think could end up playing out for us. And pretty much what would happen is we end up coming back within prior market structure of this descending resistance, and we could actually just end up chopping around this before we truly cement a bottom being in, a true trend reversal, and then we would expect to see us actually start to take back off once again. So this is kind of what I'm watching for with the SPX. We've had a nice move off of the lows down here that we stitched in December. And so this is a confirmed 5 waves up. We would expect to see a deeper correction kind of ensue from here. 1, 2, 3, 4, and then 5. And so I do believe that we will see a continued sell-off. We're not over it by any means quite yet. And we'll most likely come back down to about 39.30, all the way upwards of about 4,000. That's kind of the area of demand that I see inside of the market, anywhere from the 0.5 to the 618. And while it is possible we could go lower, we don't want to see the SPX go lower because that would show more weakness inside of the market, and it could actually set us in for a deeper drop depending on the way the market works. Now, a lot of this is going to be factored around what happens with the DXY. The DXY has reclaimed support, and this is what I've been talking to you guys about for a while now. I was ultimately expecting to see a bounce off of this major support level, and we've pretty much done exactly that. We did temporarily break down from this support, but it ended up being a bear trap before we ended up impulsing back up. And so as it stands today, the DXY is looking strong. The SPX looks like it needs to go lower. If the SPX needs to go lower, Bitcoin's obviously going to be going a little bit lower, which is why I say that we could go all the way down to about 20,500, even potentially 21,000, somewhere inside of that range is where I'm watching for. But the SPX has a couple resistance levels. Our next target's going to be about 105.5, and we could run all the way up to about 107, potentially 108. And regardless, no matter how high the dollar goes, I do expect that this is just going to be a lower high, and then we would ultimately expect a breakdown and to continue on in this downtrend. The big thing is we have just retested a very important level. This is a long-term macro level, and that's why I do believe that we are starting to see the bounce that we've had. So far, with us seeing this sort of bounce, I don't think it changes anything in the big picture. I view this as a blow off top, and the decline on the way back down was the confirmation of our new bear trend. And so even if we bounce all the way back up to 107, even 108 potentially, this is ultimately just going to result into what I believe is a big picture A, B, C as we come all the way back down, and potentially even come all the way down to the lows that we stitched in here in May of 2021, all the way taking us back to about January of 2018. Because keep in mind, guys, that this, where the dollar topped, ended up creating that massive 2017 bull run. This was the top of that bull run. This retest of this range high was the very end of COVID. And then obviously we had that big bull run that followed shortly after. This was the top of Bitcoin at 65 and 69,000. And so this massive move that we've seen cleared the range highs, and this has been our 2022 bear market all the way through, right? And so after that move, no matter how high this bounce comes, we are expecting that we'll see a deeper decline, and that's where I think that we'll ultimately come back down for a 3-year bear market, and we'll bottom sometime at the very beginning of the very end of the year of 2025. That's pretty much what I'm watching for here when it comes to the DXY, and I most likely believe that the end of our next bull cycle will take us somewhere around this support floor for the dollar. And so the fact that we've overextended so high just means that we've got more room to let cryptos kind of rally. The fact is, guys, these were very big bull runs, this one here and this one there. So if we retrace the entirety of this impulse from the lows of, about 89, then that point we're going to see a lot bigger bull run, and that's going to be across the board. I would expect commodities to perform very, very well. Equities most likely continue to perform very well like they have always. But then Bitcoin, in my opinion, should perform exceptionally well like it always does. It always performs the best. It outperforms everything. And so the deeper the move on the downside is the bigger the move that we will get. And then from there, we would have another bear market for Bitcoin. But regardless, nothing changes in the short term. We are going to see further impulsing from the dollar. If we jump into a shorter time frame, we did just reclaim support. This is a bull flag. We're going to rally, in my opinion, at least up to 105. And depending on how that consolidation goes, we could see something like this, correct back down and do something like that, and then that would set us up for a bigger move upwards of about 108. But I'm not necessarily expecting 108 to happen until we get a little bit more of reaccumulation. And then from there, that will be the top of our B wave before we start that deeper descent on the way back down. And so that's really the way the Bitcoin's going to shape up. I believe Bitcoin's going to bounce here fairly soon, send us into the final impulse before we get a deeper consolidation. And, the DXY is going to be chopping around. This could take a decent amount of time. Like I stated, this consolidation before we get upwards of the top of our B wave. And then even from here, we could take a while to break down, and that could be taking us all the way into spring to even early summer of this year. So anyways, guys, this is the video I had for you. Wanted to kind of map out what I see across the board on all of the markets. We are going to expect to see a deeper correction across the board in stocks. With the dollar rising, we are going to expect to see Bitcoin continue to drop, but nothing really changes in the short term. I've been mapping this out for you guys. Anybody that wasn't buying now has a good opportunity. A massive discount has been presented inside the crypto markets. So anybody that wants to be accumulating, reaccumulating, now is your opportunity. So thank you guys so much for tuning in. And with that being said, I will catch you in the next one. As always, peace out.